Welcome to the Big Four Accounting Firms podcast brought to you by big4accountingfirms.com. Now, in today's podcast, I wanted to talk about news out of KPMG. And reportedly in the US, they are making it mandatory to have the COVID-19 vaccine in order to remain employed. And I'm not sure exactly of the deadline for that, but that's reportedly the rumor now, that you have to be completely vaccinated to remain employed there. Now, previously at KPMG, you only had to be vaccinated to go into the office and to go to events and client sites. And that's what most of the big four accounting firms are doing right now. And it's because they know they would lose some percentage of their workforce. And I'm sure they don't want to be the vaccine police either. But there's also the case where you have to, in order to work with government institutions in the US as a contractor, you have to have the COVID-19 vaccine. That's being challenged in multiple places, but as of right now, that's the way it is. And so that's the big four accounting firms are requiring it to work on government engagements. But now reportedly KPMG has gone the route of certain companies like IBM and other companies that they require it as part of employment. Now, there probably will be the ability to do some exemptions in there, but there's just more to come out of this. So we'll keep you updated on that. And it's just going to be interesting to see how the big four accounting firms roll this out, if they're all going to do that or not. Now, another thing I want to talk about today is last week, there's a whole bunch of news about benefits at KPMG. The 401k, they're going to automatically enroll people in it and do an employee contribution. And there's been some people commenting online that it's not really that great because they used to have a retirement benefit. And also KPMG is being currently sued over their retirement benefits because I think of hefty fees in their accounts. So I think people have to keep in mind when they look into these companies' benefits, what they put out online. And I went over this last week, is very vague on purpose because I think they know that their benefits aren't that great. And if they change from one benefit structure to another, it's probably not that big of a change. For example, this KPMG thing, they used to have a retirement benefit where they would contribute to a retirement account. And now they're just going to switch it to putting it into your 401k. So I think people have to keep in mind that a lot of these retirement benefits aren't as great as they seem. And the big four accounting firms, I mean, if they were so great, they would publish them somewhere so that you can compare between firms, but they don't do that. And even before you join, they don't really tell you that much, and they don't really give you the details. And even when you join, there's still not the greatest level of detail because the less benefits you take advantage, the more money they make. And another thing too is none of these benefits really make a difference as far as retirement stuff. If the vesting period is not beneficial, for example, if it's multiple years to vest into what the company pays you, meanwhile you're putting in the hours every week and the company's paying into your 401k or whatever retirement benefit, but you don't spend enough time at that firm to vest into it, well, then it's just them putting fake money into that account, in my view. And I think the big four accounting firms are getting better and better at promising a lot of stuff, but requiring different vesting requirements. And when I was looking at comments around this stuff, I also ran into people talking about E&Y. And I know that E&Y went to unlimited vacation policy. Now, that's extremely impossible to take advantage of because you're not going to be able to take advantage of unlimited vacation and still remain employed or get a good performance evaluation at the end of the year. And people are complaining because if you quit E&Y, there's no vacation balance to get paid out. And at other firms, you can earn up to 3-4 weeks of vacation a year. And it obviously maxes out at the 3 or 4 weeks. But if you quit the firm, you get basically 3 or 4 weeks of pay. And now that's completely gone at E&Y. So the big four accounting firms are very good at moving the goalposts with benefits. And you might hear a bunch of different news about PwC where you could work from anywhere. KPMG changing their retirement benefits, but it's the fine print that you need to look into and what the big four accounting firms are actually doing. They're not going to willingly just increase their expenses exponentially. There's usually something more going on, and it wouldn't amaze me if they move a lot with regards to retirement benefits and just increase the vesting period, because it's a win-win for them. You have to stay to get them, and if you do stay to get them, then it's worth it for the firm, because that means you spent 3 years or 4 years or however long it is. In the case of an associate, at least 1 year to vest into the firm payout. And a lot of some of them, you have to actually be working there for a period of time before you even start earning the employer contribution. So it's really a win-win for them the way they start structuring this. And the press release is always what they want you to look at, but then when you go look at the details, it's less beneficial for the employee. And so KPMG changes their retirement plan 1 week. They're getting sued behind the scenes, and also they're doing mandates. So the work they're doing for employees is a mixed bag, and you just have to read between the lines. But that's the update for today. Make sure to subscribe to this podcast to get future updates, and check out the show notes for helpful links. Thanks for listening.